Hey everyone, it's Josh from the Blockchain DXB podcast, and today is the 27th of August 2026. Now, so far, the price of Bitcoin in the global cryptocurrency market is concerned Satoshi. Since the last 24 hours, it has marginally fallen down, and according to me, like Satoshi, the reason is pretty simple. There is Jackson Hole Economic Symposium taking place, and a lot of key individuals from the finance space, they are attending this event. They're essentially waiting for the statement that is put out by the Federal Reserve Board chair, that is Kevin Walsh, which I believe is going to be speaking tomorrow on the 28th of August. So am I right in saying in anticipation of this event, the prices of Bitcoin and cryptocurrencies are being a bit cautious, and that is one of the reasons why the prices of Bitcoin and cryptocurrencies are going down?
George, you've nailed the market sentiment. That caution surrounding the Jackson Hole Symposium and the Fed's potential direction is palpable. Institutional capital especially is likely sitting on the sidelines, waiting for a definitive signal rather than risking positions ahead of key macroeconomic news. We're going to delve deeper into these macroeconomic impacts and what they mean for liquidity moving forward later in the episode.
Excellent, we'll definitely go ahead and take a deep dive into that. Now secondly, Satoshi, we're going to be talking about a really interesting news that is connected to Bitcoin and Better Mortgage, guys. They are working on a Bitcoin-backed mortgage, and they're doing this in partnership with Coinbase. Really interesting news, isn't it? According to me, news such as this is definitely a game changer. Now the third news, Satoshi, we're going to be discussing is another positive news, and this is connected to the US Security and Exchange Commission. Now look, as we know, under the Biden administration, the US Security and Exchange Commission along with CFTC, they were not fans of Bitcoin and cryptocurrencies, but now under the Trump administration, looks like United States of America wants to go ahead and make Bitcoin and cryptocurrencies great again, and the US Security and Exchange Commission, they're definitely playing a pivotal role. But this news that we're going to be talking about, Satoshi, is more about a proposal regarding crypto regulations. And the news is that the US Security and Exchange Commission, they have put forward a proposal to White House. So we'll go ahead and discuss what this news is all about. Now the final news for today, Satoshi, is a really interesting news. And this is connected to the banking industry. And check this out, Satoshi. The banking industry, they formed a new alliance. And this alliance is called as Bank Chain Alliance. And they're on the works of working on a new blockchain. This news is really powerful, isn't it? But am I right in saying news such as this does go against the very essence and ethos of why Bitcoin was created in the first place, right?
That's a packed rundown, George. This news of Bitcoin-backed mortgages directly bridges traditional finance with digital asset utility, potentially unlocking significant demand. And regarding that SEC proposal, it suggests a move towards clearer regulations, which could bring more institutional confidence into the space long term. It's a clear paradox, though, with those banking alliances creating permission systems. That directly clashes with Bitcoin's decentralized ethos, establishing parallel, competing philosophies.
Definitely isn't it, Satoshi? But in today's episode, we'll go ahead and discuss what this news is all about. So it looks like we have quite a lot of interesting things to cover in today's episode. But like we do in every Blockchain DXB podcast, we'll also be looking at two news from Dubai, UAE and the Middle East. Do you want to tell our listeners, Satoshi, what are the two news you're going to be discussing? Because both the news are from the Kingdom of Saudi Arabia. The first one, according to me, is a massive news because it is connected to Microsoft and Humane, isn't it?
To get right into it, George, the first major development is Microsoft and Humane collaborating to integrate Arabic AI directly into everyday business tools. This represents a substantial push for localized digital solutions and regional tech autonomy. Secondly, Tencent Cloud is partnering with the logistics platform Trucker in Saudi, further underscoring the kingdom's strategic position for global cloud providers looking to expand across the Middle East.
And you know, Satoshi, this might be the second time in this week we are discussing news that is connected to Humane. I believe on Monday we talked about Humane. They were working with Qualcomm, where they're working on a laptop that is built by artificial intelligence. So far Saudi Arabia is concerned, Humane is definitely a pivotal company, and they're backed by the Public Investment Fund, isn't it? So it looks like, Satoshi, we have quite a lot of interesting things to cover, isn't it, in today's episode?
You're spot on, George. Humane's consistent presence this week underscores its pivotal role in regional innovation. That Qualcomm collaboration represents a key step towards localized AI-native hardware here in 2026. Furthermore, having the backing of Saudi Arabia's Public Investment Fund, the PIF, demonstrates how critical strategic tech sovereignty is to the kingdom's broader economic diversification.
So it looks like, Satoshi, we've got a lot of interesting things to cover in today's episode. But before we go ahead and do that, a quick word from our sponsors. Hey everyone, this episode is powered by a new sponsor, that is Amana. And they are the region's first and fastest growing regulated all-in-one trading and investing app. So look guys, whether you're looking into investing in US stocks like Apple or Tesla, or mega giants like ADNOC or Salik, Amana puts the financial markets on your fingertips. It includes gold, foreign exchange, ETFs, futures, commodities, and guess what guys? They have over 375 cryptocurrencies, and this makes them the biggest crypto selection in the region. Now for the Blockchain DXB listeners guys, if you want to go and build long-term wealth without thinking about it every day, explore Amana's pre-built auto investment plans, and all you have to do is set your monthly budget, choose your preferred asset category, and let Amana automate the investing for you. Zero fees, zero lockups, 100% customizable. And here's the thing guys, funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even crypto wallets. No friction and no hassles. And the best part is guys, let's say if you need support, you would absolutely love Amana for this, because they offer 24/6 human customer service, as well as a personalized sales support, real people, real help, and the customer support is in English as well as in Arabic. And for the Blockchain DXB listener and community guys, I do have something really exclusive for you. What you can do is register with Amana using the code Blockchain DXB, or you can also use the link that is in the show notes below. And here's the best part guys, once you register, fund your account with a minimum of $100 and at least go ahead and make one trade, and then you'll receive a $100 trading bonus credit to your account the following month. But look guys, it's real important to note, the bonus is non-withdrawable. It is there to help you trade and learn. So look guys, if you're looking for a transparent, powerful and easy to use app, that's Amana for you. So what are you waiting for guys? Download the app now, or you can also visit the website that is amana.app, and don't forget to use the code Blockchain DXB. And Amana guys is all markets one app. Next guys, I'm happy to announce that Blockchain DXB is the official media partner with one of the OGs in the cryptocurrency and blockchain event space, and that is Blockchain Futuristic Conference taking place in Florida this year, as well as ETH Women taking place simultaneously. And trust me guys, this is an event that you don't want to miss, isn't it? Cause for the very first time, North America's most immersive Web3 event is heading to the United States of America, and the Blockchain Futurist Conference and ETH Women event is actually taking place between the 5th and 6th of November. And the location is absolutely stunning guys. It is taking place at Guitar Hotel at Hard Rock, which is in Hollywood, Florida. That's right guys, palm trees, panels, and the biggest mind in blockchain and cryptocurrency is all in one place. So there will be multi-stage panels, NFT galleries, DeFi showcases, hand-on tech demos, metaverse experiences, even outdoor VIP cabanas, and quite a lot more. And the Guitar Hotel at Hard Rock guys is one of the most iconic venues in the country. So look guys, if you're in the Web3 space, cryptocurrency, Bitcoin, or even artificial intelligence space, or just want to do some serious networking, this is the place that you got to be. And to all of you Blockchain DXB listeners guys, we have something really interesting for you, because you can get a 25% off the tickets. So just use the code DXB25, and the link to the event as well as the code is in the show notes below. And as an official media partner, I'll be doing exclusive live coverage, interviews, behind the scenes access, and I will be spotlighting some of the most exciting projects shaping the future of decentralized finance tech. So if you're at the venue guys, definitely come and say hi. Maybe we can catch up for a coffee as well. So listen guys, the code is DXB25, and by using this code you will be eligible for a 25% discount. And the event is taking place between the 5th and 6th of November 2025 at the iconic Guitar Hotel at Hard Rock, that is in Hollywood, Florida. And in the show notes below guys, there's all contact details for Blockchain Futuristic Conference Florida 2025, as well as ETH Women. And look guys, this is the future of blockchain technology brought into life, so don't just read about it, be there and head to the website that is futuristconference.com, and go ahead and use the code DXB25. So see you at the event. Next, Advanced Media. Advanced Media guys is the largest distributor of professional video, photo, broadcast and cinematic equipment and accessories in the Middle East and MENA region. With over 2 decades of experience, Advanced Media is now the largest distributor in the Middle East, representing more than 100 recognizable brands, including brands such as Zeiss, DJI, Hasselblad, Red and Rode. As a matter of fact guys, the very mic that I'm recording is being sponsored by Advanced Media as well, and Advanced Media has showrooms in Saudi Arabia and services as well. Looks like they're definitely taking the Middle East by storm. And here's the beautiful thing guys, they're taking corporate social responsibility very seriously, and they're focusing on 3 P's, that is people, planet and prosperity. Now listen guys, if you do want to find out more information regarding the statement of corporate social responsibility, check out the website, that is www.amt.tv. And here's the beautiful thing guys, they also want to be a leader and set an example and reputation as a pioneer and member of the community. And in doing so guys, they also have an AMT scholarship with SAE Institute in Dubai, UAE. So definitely check it out. And also guys, Advanced Media is committed to persistently developing, organizing and hosting training workshops, seminars and community events that educate, inform and familiarize consumers with new equipment and the latest technological advances. So listen guys, do one thing. If you do want to support this channel, go to the website, that is www.amt.tv, and follow the social media channels as well. All of the details are in the show notes below. Next, Startup OI is global one-tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store and App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called the Race Pace Podcast. So check out the Race Pace Podcast across all leading platforms. And the Race Pace Podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gulf Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs. And these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen guys, these NFTs are going to be absolutely massive. So do one thing, go to Spotify, go to iTunes, go to any leading podcasting platform, check out the Race Pace Podcast across all leading platforms. And finally guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet, and this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below. Now guys, since you're taking care of that, let's do one thing, Satoshi. Let's quickly run to the global cryptocurrency market. Now here's the crazy thing, Satoshi. Despite the prices of Bitcoin and cryptocurrencies marginally falling down, if you look at inflows in the world of crypto ETFs, we do have a lot of inflows, and according to me, that is definitely a positive sign. And the crypto ETF inflows, guys, is accounting to a staggering $533.8 million. So am I right in saying, Satoshi, based on the crypto-related ETF inflows, along with the Jackson Hole Economic Symposium, the next few days are really critical, not just for the price of Bitcoin or cryptocurrencies, even for US economy, as well as inflation and other data, isn't it?
George, that disparity between falling spot prices and massive $333.8 million influx into ETFs indicates significant institutional accumulation. Smart money is clearly absorbing the short-term retail volatility caused by pre-Jackson Hole fear. You correctly identify this critical junction. The signals regarding inflation and interest rates from Fed Chair Warsh tomorrow will directly govern macro liquidity, essentially setting the trajectory for both traditional finance and digital assets for the remainder of the year.
Now, what I'd really urge our listeners to do is go ahead and check out what is going on regarding Jackson Hole Economic Symposium, and make sure you only go ahead and look at information from official sources. Now, if you look at the global cryptocurrency market, Satoshi, It has marginally fallen down since the last 24 hours, and it is down only by 0.08%, and the global cryptocurrency market stands at $2.73 trillion. And if you look at the total cryptocurrency market volume, guys, it is well below the $100 billion mark. It is at $80.06 billion. And what I really am not liking, Satoshi, is the volume of decentralized exchanges. It has been consistently on a downtrend, and the 24-hour volume of decentralized exchange is only at $7.89 billion. The total value locked in comparison to the last few weeks has definitely picked up pace, but it is still below the $90 billion mark. It is only at $87.54 billion in 2025 Satoshi. On an average given day, the total value locked was hovering almost double of that, certain cases even higher than that. But in 2026, looks like cryptocurrencies connected to proof of stake is definitely not having the best year, and I'm talking about it only from the total value locked point of view. But what I want you to do next, Satoshi, is I want you to run through some matrix that is connected to decentralized exchanges. So why don't you do one thing, Satoshi? Why don't you tell our listeners the matrix of the top 5 platforms in the world of decentralized exchanges, please?
George, your summary of the macro situation provides crucial context. That slight overall dip and the continued drop in DEX volume truly highlight the broader market caution right now, especially when contrasting that TVL stagnation with the strength we saw back in 2025. To address you directly, here are the top 5 platforms by 24-hour DEX volume. Uniswap leads with $1.89 billion, followed by PancakeSwap at $892.07 million. Pump holds the third position with $567.89 million, while Aerodrome recorded $459.55 million in volume. Finally, BisonFi completes the top 5 at $411.369 million.
Well, thank you so much for that, Satoshi. Really appreciate that. Now, here's the crazy thing, Satoshi. The volume of stablecoins isn't looking that great. Tether USDT is only at $65.71 billion. Circle USDC, guys, is at number 2nd. But today, the volume is only at $14.01 billion. Yesterday, Satoshi, the volume of Circle USDC was almost double of this. I believe it was around the $36 billion mark. And at number 3rd, guys, is the volume of FDUSD at $192.14 million. Now, what I want you to do next, Satoshi, is I want you to run through some matrix that is connected to market cap of Bitcoin. So why don't you do one thing? Tell our listeners the market cap of Bitcoin, what is going on since the last 24 hours and its dominance, and do the same thing for Ethereum as well as Binance BNB Coin for our listeners, please.
Right now, Bitcoin's market cap is holding at $1.57 trillion, with its dominance firmly at 57.60%. Looking at Ethereum, the market valuation is at $297.369 billion, representing 10.09% of the total. And Binance Coin has a market cap of $93.06 billion.
Well, thank you so much for that, Satoshi. Really appreciate that. Now, look, Satoshi, in every blockchain DXB podcast, we tend to look at one new matrix. Yesterday, we looked at coins that were connected to Genius Act. But today, Satoshi, let's do one thing. Let's go all the way from Europe. So why don't you tell our listeners some information regarding MiCA compliant stablecoins? But before we go ahead and do that, why don't you tell our listeners what is a MiCA compliant stablecoin, the necessity for it, the benefits as well as drawbacks?
George, shifting focus to Europe, MiCA-compliant stablecoins are digital assets designed to maintain a stable value that strictly adhere to the EU's markets and crypto assets regulation. They are classified as either asset reference tokens or e-money tokens, requiring issuers to uphold high transparency and governance standards. The necessity stems from the need to harmonize fragmented regulations across the EU and mitigate systemic risks. This brings direct benefits like enhanced legal certainty for institutions and increased protection for retail consumers. However, a significant drawback is the high compliance burden, which could create barriers for smaller players and potentially limit operational flexibility relative to unregulated issuers.
Now, see, Satoshi, so far stablecoins are concerned, according to me, they are centralized entity, and I do agree with regulations, but there are rumors circulating right now that MiCA wants to have regulations for decentralized finance space as well. According to me, that is a massive no, isn't it? Because the whole point of decentralization goes into waste if there is a centralized entity making regulations, right?
George, that perspective underscores the fundamental ideological conflict between regulators and the blockchain ecosystem. Imposing centralized oversight on genuinely decentralized autonomous organizations or non-custodial protocols directly challenges the very autonomy that defines the DeFi space. Furthermore, applying traditional compliance requirements like KYC creates immense technical and practical hurdles for permissionless systems, potentially stifling innovation or pushing activity entirely offshore. Such a move toward DeFi regulation fundamentally attempts to shoehorn trust-minimized architecture into trust-based legal frameworks.
This goes back to the notion, Satoshi, if regulators want to go out and do something regarding decentralized finance, the best thing is not to do anything at all, but knowing builders in the cryptocurrency and blockchain space, Satoshi, let's say if there's any positive development regarding regulations in decentralized finance, they will definitely be benefited by it as well, because it does give some legitimacy to the decentralized finance space as well, isn't it?
George, that perspective highlights the inevitable trade-off. For some, regulatory clarity does represent a form of institutional validation that could accelerate adoption and capital inflow. The establishment of standardized safeguards, perhaps around custodial solutions or stablecoin reserves, might provide context necessary for mainstream participation. However, this legitimacy comes at a cost, potentially creating immense compliance overhead and forcing protocols to centralize aspects of their governance, essentially eroding the unique value proposition of DeFi. This dynamic could create a bifurcation, George, with regulated compliant protocols attracting institutional money on one side and purely decentralized sovereign entities continuing on the original path.
So Satoshi, if you were to choose to have regulations for decentralized finance space, and if you're given only two options, yes or no, what would you pick and why?
George, from an analytical standpoint prioritizing the core innovation of blockchain, the preference would lean heavily toward no. Implementing regulation inevitably mandates centralized compliance, directly undermining the foundational principle of decentralized trustless systems. This would sacrifice the very uniqueness that defines DeFi for the sake of institutional comfort.
Thank you so much, Satoshi, for your perspective. Really appreciate that. Now let's do one thing, Satoshi. Why don't you tell our listeners some metrics that is connected to MiCA compliant stablecoins for our listeners, please?
Sure, George. Let me go and do that for you. The total market capitalization for MiCA-compliant stablecoins stands at $74.2 billion today, showing a small 0.1% decrease over the last 24 hours. Circle's USDC dominates with a market cap of $73.51 billion, and we're seeing others like URC at $460.47 billion, while UR Convertible holds $169.21 million. Rounding things out, Urite is at $36.60 million and Monerium Euro Emini is at $32.55 million.
Well, thank you so much for that, Satoshi. Really appreciate that. Now, just to give some comparison, Satoshi, yesterday we looked at United States of America, and if you look at Genius compliant stablecoins, the market cap was at $73.7 billion, and so far as MiCA compliant stablecoins is concerned, their market cap is $74.2 billion, isn't it? And what is crazy, Satoshi, the biggest stablecoin issuer, that is Tether USDT, they are not trying to be compliant in the United States of America, as well as with MiCA regulations.
That's a key comparison, George, showing that the market for MiCA-compliant stablecoins slightly surpasses the Genius-compliant market, solidifying Europe's strong position in regulated digital finance. It really highlights the friction around Tether's strategy. Despite their global dominance, their conscious decision to abstain from both US and MiCA compliance fundamentally limits their operational scope within those jurisdictions, creating a significant void that compliant issuers like Circle are actively filling, effectively bifurcating the European stablecoin market based on regulatory adherence versus raw liquidity.
Well, definitely interesting point, isn't it? Now let's do one thing, Satoshi. Let's go and look at the king of all kings, that is Bitcoin. So do you want to tell our listeners what is going on regarding the price of Bitcoin? How is it reacting since the last 24 hours and 7 days? As a matter of fact, Satoshi, do the same thing for Ethereum as well as Binance BNB Coin for our listeners, please.
George, looking at the market leaders, Bitcoin is trading at $78,380, experiencing a slight pullback of 0.67% in the last 24 hours, though its 7-day trend remains very strong with nearly a 14% increase. In contrast, Ethereum is pushing higher, priced at $2,468, up 0.35% since yesterday and showing an impressive 16.28% gain over the week. Binance BNB is also holding its gains well, trading at $699, up 0.22% on the day and solidly in the green with a 13.15% weekly increase.
Well, thank you so much for that, Satoshi. Really appreciate that. And here's the thing, guys, if you look at the Fear and Greed Index, right now it is still at greed, and the number associated is 80, and it's going to be really interesting to see, Satoshi, what happens between the 27th and 29th of August, because there is a massive event taking place at Jackson Hole, Wyoming, and this event, guys, is titled Financial Innovation, Implications of Payment and Policy, and the Federal Reserve Board of Kansas City. They are the ones hosting the event, and at that event, there will be dozens of central bankers, policymakers, academics, as well as economists from all around the world, as it is the annual economic policy symposium. Now the participants, guys, they will convene to discuss economic issues, implications, and also policy options pertaining to the symposium topic. Now it's important to know, Satoshi, the symposium proceedings include papers, commentary, as well as discussions, and the big thing, guys, is on the 28th of this month, that is tomorrow, when Federal Reserve Board Chair Kevin Walsh, he will be making a speech, and am I right in saying, Satoshi, based on the speech, a lot of people will be checking out his sentiment, if it's going to be hawkish or dovish, and whatever happens after that, I'm pretty much sure the price of Bitcoin and cryptocurrencies will be impacted, isn't it?
Absolutely, George. That is the central focus for every major market participant right now. The sentiment at Jackson Hole, especially during that speech, will set the economic tone, and you're correct. The crypto markets will react significantly. A hawkish stance suggesting prolonged high interest rates would likely add pressure on Bitcoin and other risk assets as capital retreats from higher risk positions. Conversely, any dovish signals hinting at policy easing could unleash a rally, potentially driving that high greed score even further.
Now here's the thing, Satoshi, the Bureau of Labor Statistics, they did go ahead and publish some really interesting information. And this particular information, Satoshi, is connected to productivity and cost by industry. Do you want to briefly tell our listeners what is that information? And I wanted to ask you, at the symposium, will they also be looking at the productivity and cost by industry data which was published by the Bureau of Labor Statistics yesterday?
George, that data from the Bureau of Labor Statistics shows a split for 2025. Labor productivity only rose in half of the selected service-providing industries, ranging from a steep gain for software publishers to a significant decline in wired telecommunications. What's crucial to highlight is that unit labor costs jumped in 24 of those 30 industries, demonstrating persistent wage pressures against output. Regarding whether the Jackson Hole attendees will look at this, specific industrial reports like this provide the underlying evidence for the broader discussions. High unit labor costs are a key driver of inflation, directly impacting economic assessments. The Fed will certainly use cost industry data like this to inform their broader outlook at the symposium.
Now, I do have two specific questions, Satoshi. At the symposium, will they also be taking into consideration the war that is going on between Iran and US? And if so, what do you think could be the likely outcome of that particular situation? Secondly, Satoshi, right now there's so much of buzz in the world of artificial intelligence, isn't it? And under President Donald Trump's leadership, United States of America is definitely leading the front. So what is your take regarding your industry and the investments flowing into United States of America because of people setting up data centers in United States of America? At the Jackson Hole speech, do you think they'll be looking at that as well? And more importantly, Kevin Walsh, will he be touching base on those points at the symposium event?
George, regarding the geopolitical situation with Iran, any instability on that scale is absolutely a factor for the economists and central bankers at Jackson Hole. Major conflict impacts energy prices and sparks global volatility, which directly feeds into inflationary dynamics and risk assessment, so it implicitly informs their economic scenario modeling. Another relevant factor influencing future policy discussion, George, is the massive investment flowing into U.S. data centers. That AI-driven infrastructure boom absolutely factors into long-term productivity and growth projections. It is a key structural shift in the domestic economy, potentially redefining economic capacity, which directly concerns monetary policymakers. While the symposium focuses on financial innovation, structural investments like AI infrastructure are too significant to ignore. Kevin Walsh is highly likely to contextualize this as a foundational factor influencing future economic strength and inflation trends, viewing it as a major force driving investment into the United States.
Well, thank you so much for that, Satoshi. Really appreciate that. Now, I cannot stress this enough, guys. Make sure you go and look at information early from official sources, because with midterm elections coming up, mainstream media, they're definitely left-leaning, and they definitely will be putting out a lot of fake news and misleading information, right?
George, you're right to highlight the need for official sources, as election season always breeds misinformation. The media slant can definitely skew the perception of critical economic events. This is why relying on direct statements from upcoming forums like Jackson Hole is paramount for our listeners.
You're absolutely spot on, Satoshi. Now let's do one thing. Let's go and look at the second news for today. And this cause is connected to mortgage. And the news cause is that Better Mortgage and Coinbase, they have launched a Bitcoin and crypto-backed mortgage that will allow buyers to use Bitcoin and digital assets as collateral without selling them. And here's the thing, guys. The mortgage is designed to meet Fannie Mae guidelines, making it a standard conforming first lien mortgage. And regarding Coinbase, Coinbase One members, they can receive 1% rebate in mortgage value, and that is up to $10,000 towards closing costs. And here's the thing, guys, the product is available for mortgages, HELOCs, and refinancing, thereby potentially giving Bitcoin and crypto holders a new way to access home ownership. This new Satoshi, according to me, is really interesting, isn't it? What do you make of this initiative by Better Mortgage and Coinbase?
This partnership directly solves the liquidity dilemma for many crypto investors. George, Offering a Fannie Mae compliant mortgage allows borrowers to leverage their Bitcoin wealth for tangible real estate assets without triggering capital gains taxes, which is a major friction point. This establishes digital assets as credible collateral within standard financial structures. That Coinbase One rebate, capping at $10,000, provides a compelling incentive, effectively lowering the barrier to entry. We're seeing Bitcoin move comprehensively beyond its role as a digital store of value into practical, high-value financial service applications.
But here's the thing, Satoshi. The value of Bitcoin and cryptocurrencies are so volatile, isn't it? Just last year in October, the price of Bitcoin was $126,000, and few months ago, it was well below half of that. So there is a lot of extreme volatility in the Bitcoin and cryptocurrency space. So do you envision certain dangers associated with this initiative as well?
George, that volatility is the primary risk factor, plain and simple. The principal danger lies in the potential for margin calls. If the Bitcoin collateral value drops significantly relative to the loan-to-value ratio, borrowers would either have to add more Bitcoin or risk the liquidation of their holdings, crystallizing substantial losses. This mechanism introduces a threat of forced selling during market downturns, a dynamic traditional mortgages rarely face.
Now let me pick your brains on something, Satoshi. What if a real estate, along with buying a property, they also attach certain Bitcoin that could be sold? Let's say hypothetically if the price of Bitcoin is $70,000, what they can do is they can add the $70,000 into the real estate property. Now the whole idea I'm saying this is because 2 years down the line or 4 years or 5 years down the line, there is a very high probability that the price of Bitcoin will pick up paces in it. Do you think attaching one Bitcoin per unit or probably certain Satoshis to a particular unit is a good idea?
That bundling concept, George, brings a unique synergy to the market. By attaching Bitcoin directly to the property, you're effectively creating a hybrid investment structure that appeals to buyers bullish on both physical and digital assets. The potential for appreciation in the Bitcoin portion, as you note, could significantly boost the long-term value perception of the entire bundle. However, this introduces complex challenges regarding valuation volatility, legal frameworks for transferring bundled assets, and the necessity for specialized escrow services that can handle crypto transactions securely.
Now regarding volatility, Satoshi, let's say if the current value of the property is $200,000, if you were to attach, let's say, an X amount of Satoshis, a Bitcoin, do you think right now the value of the property will be higher than $200,000? Or do you think it will be exactly at $200,000 or probably less?
George, the market would undoubtedly value that bundle higher than $200,000. This is because the valuation isn't just for the property. It directly encapsulates the combined market worth of both distinct assets. Investors immediately recognize they are acquiring the $200,000 property plus an additional liquid asset, significantly enhancing the total tangible worth of the offering.
But as you mentioned, Satoshi, there are definitely a couple of challenges associated with that as well, isn't it? Thank you so much for your valuable insight. Now let's do one thing, Satoshi. Let's go ahead and pivot to some news in the world of US Security and Exchange Commission. And the news is that they have sent a proposal to White House, and this is to modernize crypto custody rules for investment advisors and funds. Now here's some interesting points to remember, Satoshi. The changes would clarify how regulated firms can hold and manage digital assets while also updating outdated custody requirements. Now this move, guys, does come as Clarity Act remains stalled in Congress, but the US Security and Exchange Commission under Trump's leadership, along with CFTC, that is Commodity Future and Trading Commission, they are now continuing to develop crypto regulations independently, which I think is an absolutely genius move for the cryptocurrency industry, isn't it? And if approved, guys, the new custody framework could make it easier for traditional investment firms to safely offer and manage crypto assets. According to me, Satoshi, this is definitely a great news, and the entire cryptocurrency industry, not just in the United States of America, but other parts of the world would also benefit because of this news, isn't it?
This is huge, George. Modernizing standard custody rules removes major institutional roadblocks. If approved, large funds get the regulatory air cover to enter the market legally. Plus, it pushes the industry toward robust, standardized custodianship, radiating far beyond the US, setting global precedent.
Now look, Satoshi, a lot of the Democrats, they would definitely not be liking this initiative by the US Security and Exchange Commission. So if there's any advice you'd like to give to senators and congressmen, particularly from Democrats, who are now associated with Democrat Socialists, what advice you'd like to give them? Talk to them about the benefits of such particular initiative by the US Security and Exchange Commission, along with CFTC for them, please.
George, instead of resisting the SEC's custody proposal out of political convention, Democratic senators should prioritize its inherent consumer protection advantages. Modernizing digital asset custody safeguards retail investors by enforcing strict segregation standards, significantly minimizing the risk of institutional mismanagement. Bringing these large players under a clear regulatory framework stabilizes the overall financial ecosystem, directly addressing progressive concerns about systemic risk.
It's going to be really interesting to see Satoshi how they do actually react to this particular news by the US Security and Exchange Commission and CFTC. Now let's do one thing, Satoshi. Let's go ahead and discuss the final news for today. And this is connected to the banking industry, and it looks like they are forming an alliance. And this alliance, guys, is called as the Blockchain Alliance, and it is essentially an association to create a blockchain network that will be owned and governed by the banking industry. And here's the crazy thing, Satoshi, the network will allow banks of all sizes to go ahead and offer tokenized deposits, stable coins, smart payments and automated settlements, while at the same time maintaining regulatory and security standards. And the goal, according to them, is to help smaller local banks compete with larger institutions, while at the same time serving communities across the United States of America. And this alliance, guys, they are currently selecting a technology partner and targeting a 2027 launch. What do you make of this particular alliance, Satoshi? According to me, look, Satoshi, this goes against the very principles of why Bitcoin was created, isn't it? And when you talk about alliance, consortiums, or associations, Bitcoin in particular has severe allergic reaction to them, isn't it?
George, you've pinpointed the essential philosophical conflict. This alliance's launch perfectly illustrates how traditional banking desires the operational benefits of blockchain technology while fundamentally rejecting the decentralized, permissionless ethos of Bitcoin. They are effectively creating a permissioned, centralized network controlled by defined members, which clashes directly with the idea of a globally distributed, trustless system. This creates a parallel track, focusing on efficiency gains for existing institutions, rather than true integration with the public open marketplace, highlighting those severe allergic reactions you described.
Now let me ask you, Satoshi, at the Jackson Hole event, do you think they'll definitely be touching base on this as well? Or maybe they'll be presenting this in a positive way?
George, that kind of private banking innovation directly relates to the symposium's theme of payment and policy modernization. Policymakers might present it positively at Jackson Hole, viewing it as a safer method for achieving blockchain efficiencies because it operates within existing regulatory oversight, distinctly contrasting with the perceived risks of public decentralized systems. This approach reinforces established financial structures adapting to technology rather than replacing them.
Interesting, isn't it? But me personally, I'm not a fan of this particular news, to be completely honest. So these were some macro level newscasts on the Bitcoin blockchain, cryptocurrency and artificial intelligence world from blockchain DXB. Now let's do one thing, Satoshi. Let's go ahead and discuss two news from Dubai, UAE and the Middle East. Why don't you do one thing, Satoshi? Why don't you tell our listeners the first news that is connected to Microsoft and Humane, and then let's go ahead and discuss the second news as well, alright?
Let me go and do that right away, George, for you. Both Microsoft and Humane are planning to actively bring specialized Arabic AI directly into everyday business tools. Microsoft and Saudi Arabia's Humane are taking strategic steps to significantly expand their existing AI partnership within the region. The companies plan to integrate and bring Humane's advanced Alum models into the broader Microsoft global ecosystem, expanding capabilities. Alum is designed specifically to handle complex Arabic language AI applications and nuances effectively. These models are also designed to deeply understand regional business context and cultural specifics very clearly. Regional developers could gain direct access to Alum, utilize Microsoft Foundry's robust platform capabilities for development. Individual businesses could build and seamlessly customize their own Arabic AI applications suitable to local requirements. Furthermore, companies could also develop highly specialized autonomous AI agents explicitly using the Alum model. There's a defined plan for Alum's direct integration with the popular Microsoft 365 Copilot platform productivity tools. Consequently, this successful integration could bring intuitive Arabic AI functions into everyday workplace tools used globally. This means forward-thinking businesses would not need to independently build specialized Arabic AI systems entirely from scratch. Microsoft strongly emphasizes that security and proper data governance will absolutely remain important, paramount considerations globally. Various public sector organizations within the region could also substantially benefit from implementing this powerful technology. This strategic partnership could powerfully accelerate widespread Arabic AI adoption rates across the entire MENA region. The collaboration effort is expected to expand rapidly across Saudi Arabia and further into wider, lucrative MENA markets. Looking ahead, Microsoft and Humane may actively develop additional sophisticated AI capabilities jointly and collaboratively. Future cooperation between the two giants could potentially include fundamental AI infrastructure solutions and hardware devices. Strategic joint commercial opportunities and market ventures are also actively being explored together for mutual growth. Finally, more significant developments are broadly expected and anticipated at Saudi Arabia's upcoming LEAP event.
It's going to be real interesting to see the announcement at the LEAP event. And here's the thing, Satoshi, I'm also curious to check how Alum is going to be integrated into Microsoft 365. But what I want you to do, Satoshi, I want you to tell our listeners how can developers and businesses benefit because of this. And I want you to touch base on three areas. That is time, cost, and quality in the world of artificial intelligence.
That integration brings massive advantages, George. Regarding time, this drastically reduces time to market because developers aren't building foundational Arabic AI from scratch, allowing them to instantly deploy localized intelligent agents. From a cost perspective, accessing Alum through something like Microsoft Foundry completely bypasses the prohibitive research and development expenses associated with creating specialized language models. And regarding quality, because Alum is architected specifically for Arabic language nuances and regional business context, the resulting output and customer interaction are inherently superior to generic AI solutions. This empowers regional businesses to innovate faster.
Well, thank you so much for your valuable insights, Satoshi. Really appreciate that. Now let's do one thing, Satoshi. Let's go ahead and discuss the second news. And this is also from the Kingdom of Saudi Arabia, Senate. So why don't you do one thing, Satoshi? Why don't you tell our listeners news connected to Tencent Cloud? Because they are partnered with a Saudi logistic company called Trucker, Senate.
That is absolutely correct, George. Tencent Cloud and Trucker have formed a significant partnership, expanding regional collaboration. Trucker operates a highly notable network, one of MENA's largest digital freight networks globally. Trucker will migrate its entire platform, moving to Tencent Cloud's Saudi region specifically. This strategic move noticeably strengthens Tencent Cloud's expanding presence in Saudi Arabia. Trucker will also actively adopt Tencent's CodeBuddy AI coding assistant for its developers. CodeBuddy will directly help transform Trucker's internal DevOps operations and workflow. The partnership comes as overall Saudi AI adoption continuously accelerates, showing market demand. Around 33.1% of Saudi companies successfully now use AI technologies in their operations. Tencent has also strategically expanded access to its new Hi3 AI model recently. Hi3 provides very advanced reasoning and useful AI agent capabilities to businesses. Regional businesses and developers can now directly access the Hi3 model. Hi3 has recorded over 68 times more significant API calls than its preceding model. Hi3 is conveniently available through Tencent's unified WorkBuddy AI workspace program. It is also readily available through Tencent's advanced AI creative platform known as Miura. Tencent Cloud Token Hub provides centralized access to multiple diverse AI models efficiently. Tencent established its initial Middle East cloud region located within Saudi Arabia. The company committed over $150 million, investing heavily in regional infrastructure projects. Tencent and Trucker formally announced this partnership just before the LEAP 2026 event.
Where is Tencent Cloud, Satoshi, originally from? Where is the company originally located?
George, Tencent Cloud is part of the broader Tencent family, and the company was founded in Shenzhen, China. It's also worth noting that their first cloud region in the Middle East is the one we discussed in Saudi Arabia.
They're definitely a giant company, isn't it? Thank you so much for covering this news, Satoshi. Really appreciate that. So these were some macro level newscasts on the Bitcoin blockchain, cryptocurrency, and artificial intelligence world from blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Now let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, where you listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, alright?
Sure, George. Let's go ahead and kickstart the Ask Me Anything series. I'm curious to check what questions listeners have in store for us.
Hey everyone, it's Josh on the Blockchain DXB podcast. You're listening to the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. And we have a question from Zia who asks, could Bitcoin-backed mortgages become a major bridge between crypto wealth and traditional finance? Now, to be completely honest, Zia, because of the volatility aspect of the price of Bitcoin or cryptocurrencies, me personally, I don't think so it'll be a major bridge between crypto wealth and traditional finance for a short period of time. Particularly when the prices of Bitcoin or cryptocurrencies are pumping up, like we are seeing since the last 7 days, there will be a lot of narrative around Bitcoin and cryptocurrency-backed mortgages. But the moment the prices of Bitcoin or cryptocurrencies go down, I don't think so people will be opting for that. Because look, just last year in October, the price of Bitcoin did actually reach a new all-time high in it, and since then, the price of Bitcoin has actually fallen down by almost 50%. And also right now, thankfully, because of President Donald Trump, we do have an administration which is very pro-Bitcoin and cryptocurrencies, but what happens, let's say, if left-leaning administration take over? In that case, they're not fans of Bitcoin or cryptocurrencies, isn't it? So according to me, look, right now, and I'm only talking about since the last 7 days, because the price of Bitcoin and cryptocurrencies are pumping up, this news will definitely be a massive news, but the moment price of Bitcoin and cryptocurrencies go down, I do feel that the narrative around this will be slowing down as well. What is your take regarding it, Satoshi?
George, your points highlight the core tension surrounding any asset-backed loan based on a highly volatile asset. On one hand, initiatives like this represent a significant step toward greater legitimacy and the integration of digital assets into the traditional financial system, regardless of short-term market sentiment. Standardized, compliant products might provide the stability needed for long-term adoption. However, your criticism is equally valid. The inherent price volatility can lead to rapid and unexpected margin calls or liquidations, especially during market downturns, making them potentially unsuitable for long-term planning for many investors or lenders alike. The cyclic nature of excitement around Bitcoin products can certainly depend on performance, and uncertainty around future regulatory stances adds significant risk. The long-term success of these products likely hinges on finding ways to effectively manage that volatility, though the conflict remains a key point of debate.
The only thing, Satoshi, which I kind of like is that Coinbase One members, they, I believe, will be receiving a 1% rebate, isn't it? So do you think that 1% rebate will actually motivate a lot of people to go into mortgages that are backed by Bitcoin or cryptocurrencies? But it is also important to know, Satoshi, the amount of rebate they can receive, I believe, is only up to $10,000, isn't it? According to me, that is relatively less.
George, while that rebate, capped at $10,000, offers a tangible reduction in closing costs, its overall motivating power is likely limited for sophisticated investors navigating the risks of a Bitcoin-backed mortgage. The underlying concern about volatility and potential liquidation remains the dominant factor. For institutional players or large asset holders, a relatively small percentage rebate does not offset the significant macroeconomic and market risks inherent in using Bitcoin as collateral. The incentive primarily serves as minor marketing appeal rather than a transformative economic driver.
It's going to be really interesting to see, Satoshi, if other cryptocurrency exchanges do actually put up something similar. Definitely an interesting question here. And that's about all, guys. I'm the Ask Me Anything C, some blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating and share the word across. Remember, Monday to Thursdays, we are Blockchain DXB podcast. We look at the process, we look at the logical development, we talk about different partnerships. Then, guys, you look at 2 news from Dubai, UAE and the Middle East. We look at the latest technological development. And so far as artificial intelligence is concerned, United Arab Emirates along with Middle East, they're definitely taking leaps and bounds in it. And what you're listening to right now, guys, is the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So thanks so much for listening, guys, and have a nice one. Bye-bye.